Hey, traders, and welcome to today's Forex market update. In this video, we'll dive into the critical events that could drive the currency markets in the week ahead. Let's start with central bank outlooks. The Federal Reserve's two-day policy meeting on January 28th to 29th will likely dominate market attention, with expectations of holding rates steady at 4.25% to 4.50%. Traders will be keenly watching for hints of future rate adjustments from Chair Jerome Powell's remarks, as these could spark volatility in the US dollar. Meanwhile, the Bank of England's February 6th interest rate decision looms large, with the build-up already impacting the market amid the UK's persistent inflation pressures. Moving on to economic data releases, key reports from the US include new home sales data on January 27th, giving insight into the housing market, and durable goods orders on January 28th, which will signal the health of manufacturing. Additionally, the Eurozone's preliminary Q4 GDP figures and December unemployment rate, set for January 31st, will shed light on the region's economic trajectory and influence euro to US dollar performance. On the geopolitical front, evolving US-China trade relations, fueled by hints from former President Donald Trump about potential tariff reductions, could weaken the US dollar and bolster risk-sensitive currencies like the AUD. Simultaneously, US-Canada trade dynamics remain in focus, with the Canadian dollar showing resilience despite concerns over US tariffs on Canadian imports, keeping the US dollar to Canadian dollar pair in play. Finally, corporate earnings from tech giants like Apple, Microsoft, Meta, and Tesla will shape risk sentiment. Strong results could drive a risk-on mood, benefiting higher-yielding currencies, while disappointing earnings may bolster safe-haven demand for the US dollar or Japanese yen. With so much on the horizon, stay alert and plan your trades wisely as we track these pivotal events in the Forex market. Next week, the Forex market will be shaped by several critical economic events that traders should watch closely. First up is the Federal Reserve's two-day policy meeting on January 28th to 29th. The Fed is widely expected to keep interest rates steady at the current range of 4.25% to 4.50%. This decision aligns with recent data showing robust labor market performance and cooling inflationary pressures. However, all eyes will be on the Fed's statement and Chair Jerome Powell's press conference, as traders look for clues about the central bank's plans for 2025. Any hint of a pivot or a timeline for rate adjustments could stir significant volatility in the US dollar and major currency pairs. Looking ahead, the Bank of England's interest rate decision, scheduled for February 6th, is already creating buzz in the market. While this falls outside of the week, the buildup is significant. The bank faces a tough balancing act. Recent data shows inflation in the UK may not be easing as expected, reigniting concerns about its impact on economic growth. If inflation persists, the BO might be forced to maintain its current rate stance or even hike rates further, countering market expectations of a potential rate cut. This uncertainty could have ripple effects on the GBP and its performance against other major currencies. Several key economic data releases next week could significantly influence the Forex market, so let's break them down. First, on January 27th, the US will release its new home sales data for December. This report provides a crucial indicator of the housing market's strength, reflecting consumer confidence and overall economic health. A strong housing market often signals broader economic stability, which could support the US dollar. On the other hand, weaker-than-expected data might fuel concerns about slowing growth, potentially putting downward pressure on the USD. On January 28th, all eyes will turn to the US durable goods orders report for December. This release sheds light on the manufacturing sector by tracking the demand for long-lasting goods like machinery, vehicles, and appliances. Higher durable goods orders indicate robust industrial activity and business investment, which could further support the dollar's momentum. Conversely, a decline might signal economic slowdown risks, which could weigh on USD performance against other major currencies. Finally, on January 31st, the Eurozone will release preliminary GDP figures for the fourth quarter of 2024, along with December's unemployment rate. These reports will give traders valuable insights into the region's economic recovery amid ongoing inflationary challenges and geopolitical uncertainties. A strong GDP print could bolster the euro, while any signs of stagnation or rising unemployment might pressure the currency. With the Eurozone already facing mixed economic signals, these numbers will play a pivotal role in shaping market sentiment. Next week, geopolitical developments are set to play a significant role in shaping Forex market sentiment. One of the key focal points is the evolving US-China trade relationship. Recent comments from President Donald Trump have hinted at a possible softening of tariffs on Chinese goods. If these signals translate into concrete policy actions, it could lead to a weaker US dollar as traders price in improved global trade conditions and reduced safe haven demand for the greenback. This shift may also bolster risk-sensitive currencies like the Australian and New Zealand dollars, which are heavily tied to trade with China. However, any backtracking or escalation in tensions could reignite market volatility, so traders should stay alert. Another critical development involves US-Canada trade dynamics. The Canadian dollar has shown resilience recently, rebounding amid skepticism about potential US tariffs on Canadian imports. Ongoing negotiations between the two nations could have a direct impact on the US dollar to Canadian dollar pair. If tensions ease and trade relations remain stable, the loonie could gain further support. However, any surprise moves or negative outcomes in these talks could pressure the Canadian dollar, especially as it already faces headwinds from fluctuating oil prices. With the US and Canada being major trading partners, even small shifts in rhetoric or policy could ripple through the Forex market. In the coming week, the spotlight will also be on corporate earnings reports, with major technology giants like Apple, Microsoft, Meta Platforms, and Tesla set to release their quarterly results. While these are not directly related to the banking sector, they hold significant sway over market sentiment and, by extension, the Forex market. These companies' earnings provide insights into the health of key sectors like consumer demand, digital advertising, cloud computing, and electric vehicles. A strong showing could boost investor confidence, driving risk-on sentiment and benefiting currencies tied to higher-yielding or risk-sensitive assets, such as the Australian dollar. On the flip side, disappointing results from these industry leaders could trigger a risk-off mood, sending investors flocking to safe haven currencies like the US dollar and Japanese yen. Additionally, the performance of these firms is closely tied to global supply chain trends, inflation pressures, and consumer spending patterns, all of which can ripple across currency markets. Traders should also pay attention to broader equity market reactions, as strong earnings could lead to capital inflows into the US, strengthening the dollar, while weaker results might weaken it.